it's an art. If ever there's a webinar that we talked about levels like this, whereby you have a level that is above a level that is above a level. This level here can be used as a form of liquidity, the one above this one.
Okay.
So what they do, for example, in this case, it's no longer really that block that we know whether it's a demand or order block. It's no longer that
Yeah,
because they're now
it's no more
using it as
valid.
a yes, they're now using it as a form of support. Support.
Yeah,
So when it's now like that now, it's actually a form of liquidity that must be taken out before they go. This is simply money
before it goes up.
that they are watching now. They will just wipe it out, then go. So wiping it out there,
Okay.
many people many people they are buying right now. They're in the buys right now. And their stop loss, where is their stop loss
Mm,
below here?
yeah.
Yes. So that is also an art that they use to just wipe out. So yeah, they are gathering people. They gathered you here, they gathered you here, they gathered you here, they gathered you here. Most of the people they are here now. They are
Yeah.
here now, and especially those people who go aggressive. Right now, they go aggressive here. They know that we have a tight stop loss. Our stop loss tight. Then they're
Mm,
taken out.
um,
Then, yes, then they go up. That is a lot of money to the institutions. That is enough liquidity to push price up.
yeah.
That will be enough liquidity to push price up.
Yeah. Understood that one.
Right. So this is what we are waiting for on Crash 300. So all this while, if since yesterday when we analyzed the pair, it has simply been playing around. There's no trade here that I can say one could have taken. There's no trade
Mm,
that a normal professional trader could have taken. There's no trade here that one could have taken. Because for buying, we're looking at this. And for selling, we can't talk of sales in this region. We can't talk of selling in this region. We can't speak of selling. If ever someone's ever going to sell, maybe somewhere at the top there, just a retracement before a continuation up. But we can't talk of sales here. This is what we call a discount zone. Discount zone, this is a zone that they prefer to actually buy from. Then for sales, they prefer to sell from the top there. So if you find yourself selling down here like this, something is wrong with you. Something is definitely wrong with you. And as for buys, there's still liquidity that must be taken out, which is here. You see what is happening? It's crashing.
yes.
And right now, many people are in. Many people are in right now. They're in the buys already. They're in the buys. Even there are even some SMC traders that are in because to them they're saying, this is an order block, this is an order block, this is a demand. So it is just to respect, Relax. If ever, if ever a demand is there and it's above a zone, and that demand has been tested so many times like that, it's no longer worth it for them to push price from there. So they can actually use that as a form of liquidity. So many people right now, both the retail traders and actually most of the SMC traders, they're also trapped here. They're also trapped here because according to their book knowledge, they're saying we are at an order block. And when we are at an order block, market must push up. That's what they are saying. But now, according to our understanding now of price, our understanding of the way market moves, right? We are actually seeing that whole level as a liquidity, number one. Number two, we're actually seeing that market structure as well. It hasn't shifted to be bullish. Remember,
Bullish, yes.
even if even if market taps into a point of interest or your major, you see what is happening. So
Yeah.
even if market taps into your major zone of interest, and market structure doesn't shift. That market can still play around up until market structure shifts. That's why you can find consolidation or just fluctuations before it goes all the way up. So all those fluctuations, all those consolidations, they are simply there to confuse retail traders. So in this case, if you check, this was simply fluctuation. Fluctuation, it didn't even break here. It did broken here. It was going to actually come back and retest this level here, respect this level and go. He did broken in. But its failure to even break market structure there, it's showing you that this level here that you're saying, hey, it's an order block, hey, it's a what, it's actually a weak zone because it failed to break structure. A zone that is strong, it must break structure at the top there. A strong zone must break structure. So meaning, if ever this zone that we want to enter, it's a strong zone. This market has to come all the way and break structure there, which is a change of character. Change character there, then obviously pull back before. Once you see this happening, it means this one, it's a strong zone. It's a strong level, this one.
Mm.
That is how you notice even the strength of the level. This one is no longer strong. This one is no longer that strong. The amount of times that they've been attempting to break it, it's so many times. So right now, this candle can actually touch here, then we go up. That simple move, that simple move doing this, many people will be taken out. Many people will be taken out there because their stop loss are just here. Their stop loss are just below here. Just below here. That's where their stop losses are. So
Yeah, even if you look at the momentum of those 1 hour candles,
yes,
those last ones, yes.
yes, they actually you see even the length of the candle can tell you about the momentum. The length, how long the candle is can tell you much more about the momentum of the market at that particular point. So here, it's actually definitely most probably going to break here and tap into here. So there are two types of entries now. Two types of entries. We have conservative entries and we have confirmed entries and risk entries. Risk entries, those are entries that you just enter after the market taps into a zone, rejects, then you buy, stop loss below. Those are risky entries. Why are they risky entries? Because the market, so long it hasn't broken structure here at the top here, it can still play around, wipe you out, close above, wipe you out, close above, wipe you out. So long it wipes you out here, so long it wipes you out and close above here, that it hasn't broken that level. Remember, it isn't broken, so it can even wipe you out, wipe you out, close above, wipe you out, close above. Closing above, it will be closing above this zone here, this one, because this is the end of this is the bottom week of the candle, right? Of the demand that we're looking at. So here, why is it called a risk entry? It can come wipe you out, close above, come wipe you out, close above, come. So those ones are risky entries that you can take. Obviously, someone can take them. There's nothing wrong with that, but there's a way to take risk entries. Risk entries, especially if ever you're still building your account and you're still in the growth stage, you need to make sure that the risky entries, you use what we call conservative risk. Conservative risk, this is less than your normal risk. So you just take a conservative risk there. Once you take a conservative risk, where are you going to scale in? You're going to scale in after the internal market structure shifts. After the internal market structure, once it breaks here, it means this zone was a strong zone. Once it comes and breaks there, you simply wait for a pullback into any other demand that will be there. Then now, that's where you can actually enter either your normal risk or any aggressive entries that you might want to enter. You enter them after the confirmed. This is the confirmation. This is simply a confirmation to say we are now going up. Because remember, this is a lower high, right? Internal lower high. So once we've broken internal lower high, we must come down and form a higher low. Once we now have a higher low, we must continue now going up. So this break here, it's simply a confirmation to show you that we are now going up. So those are the two types of entries that you just need to be aware of. Here, risky entry. Then after the break there, that's a confirmed entry, whereby even the pullback, that's where if ever you want to go aggressive, that's where you can even go aggressive. If you want to add more trades, that's where you actually add more trades after that has happened. Here, you don't do it because it can wipe you out, close above, wipe you out, close above, wipe you out, close above, then eventually go on. They're also aware of that. They're also aware, they're even aware that there are people who are going to buy here. They are aware of that. They're also aware of that. So all you have to do is also to think in line with what they are thinking and also see what they are saying. Once you actually think, once you're able to think the way they are thinking, and you're able to see what they are also seeing, you'll be able to never be manipulated like the majority of the traders that are being manipulated every time. Because these guys, they actually use that manipulation as liquidity, and the more one, they actually also understand the nature of the human mind, whereby the more a human being is manipulated, the more they are manipulated. They know that you are going to they're going to invoke your emotions, and once your emotions are invoked, they've got you. They are done with you. They know that every other decision that you're going to make from there is going to be an impulsive decision. Impulsive decision in the sense that, for example, once someone's emotions are invoked here, let's say here someone bought aggressively there, then they are taken out here. So if ever they manage to invoke your emotions, someone is going to think, so this is support has been broken. So if a support has been broken, we sell, they sell hard again here. Sell hard, stop loss above. Here you have been taken out first time. Here you now sell hard, stop loss above. Then boom, they take you out again. Already your emotions are distorted. Psychologically, they've beaten you. Psychologically, they've beaten you. And once they've beaten you psychologically, they are done with you. They know every other decision that you're going to make, every other decision that you're going to make is going to be an impulsive, emotional decision that doesn't have any logic in it. So that's the whole trap there. To simply, even fluctuations and consolidations, the purpose of fluctuations and consolidation is simply to invoke emotions. Once they know that once your emotions are invoked, once they have managed to invoke your emotions psychologically, they've actually beaten you. Once they've beaten you psychologically, they know that each and every other decision that you're going to make from there is going to be an emotional decision. They know that you're going to lose money, definitely. Definitely. So long you make emotional decisions, your probability of losing money is 9 out of 10. So that's the whole purpose. Consolidation, fluctuation, manipulation. The purpose is one, to invoke emotions. Number two, to affect you psychologically. Once they've affected you psychologically and invoked your emotions, they are done with you. The rest, you just do it to yourself. You lose money on your own. So crash 300, this is what we're expecting. We're expecting this to be taken out as liquidity. Once it has been taken out, then we expect a change of character here. Once we get that change of character, so meaning our change of character, if ever they really manage to break below here and close below here, our change of character now will be on this zone here, because this will now be our lower high. If ever they break here and come and tap here, this will now be our lower high. Meaning, once we now have that change of character, it simply means momentum is shifted from bearish momentum, and we're now in bullish momentum. That's the definition of a change of character. So that's the real explanation of a change of character. It's simply a shift in momentum. So once we have done that change of character, either you get a pullback in any other zone that was not mitigated. If ever there's any demand or order block, or if ever gap that was not tapped, you can actually also enter there. Then we go all the way. We go to the next structure. Next structure is this one. Can give a pullback up until that's how the market moves. We break structure, we break the first structure, we move on to the next structure. We break the first structure, we move on to the next structure. We break the first structure, we move on to the next structure. So it's break, we pull back, break, pull back, push, break, pull back, push, break, pull back, push. That's how they move. So this is what we are looking at on crash 300. Then boom 500. I just want to show you something that most of you you still have a challenge in realizing. I thought those that are in the class, you're going to see this. Right. Remember, the most important thing is for you to know structure. Know your structure. When you know your structure, no matter what happens, this boom 500 is going to sell big time all the way to the zone that we're expecting it to go. From there it will buy. The same analysis that we've been having on boom 500, it's still valid. It's still valid. Nothing has even changed. I want to show you now how they messed up with the majority of you today. most of you, you're even affected emotionally. Others, they were invoked even psychologically because you're now confused. So this thing is now going up. Going up where? Going up where? Going up where? So it's all about you understanding your structure. Remember, on the daily, you identify a zone that we're expecting the market to reach, and which is this zone, right? But already on the daily, we tapped into this zone, which is a point of interest on the daily. It was tapped already. So we can't talk of it going up after it has already changed character here. The purpose of this change of character is simply so that the market can give us a pullback before a continuation up. So meaning here we are going to have swing sells as well as swing buys. Swing sells into this region, swing buys into this region as well as that region. So after you've done your daily analysis like this, and you have noticed that on the daily, where is my lower low? Major lower low is this one, right? Major lower low is that one. My internal structure, a higher high is this one. This is internal structure, higher high there. So once we now have a higher high, the market must drop to give us a higher low. Here we don't have any higher low. Why? Because no internal structure was broken. No internal structure was broken. No internal structure was broken. Here now, they kind of broke here. Here it was broken here. So there it was broken, meaning that is our higher high. So once we now have a higher, it must drop. Dropping is simply dropping to create a higher low. Once we now have a higher low, we must push to form a higher high. Higher high is higher than this. Pa. Up until I don't know where at the top. All you just need to do is to identify other levels at the top there. So once you've done all this on the daily, going down to lower time frames now, you also need to have an ability to see your structure. See where your structure is. So long your structure is not broken, it means your trade setup is still valid. All they do, these guys, what they are good at is to manipulate your mind with fake outs, with fake outs, and also with liquidity sweeps. So here, if you notice here, from this higher high, this was the current structure that was forming, lower high, lower high. So this was our previous lower high, lower low, lower low, right? So on this 4 hour, we can say this higher high, we can say this is our external structure, then this one is our internal structure, right? So we are simply wanting to create a major higher low, which is around this level. So if you check, this is bearish order flow, lower high, lower low, right? Break of structure here, change of character. After a change of character, we expect a pullback. After a break of structure, a change of character, we expect a pullback. So this whole move was simply a pullback. This market is coming all the way to break structure here. So now, this is where they caught you. Where is our previous lower high? It's here. Our previous lower high, where is our previous lower high? Our previous lower high is here. This one. So what I'm about to show you now, it's something that once you understand this, even if the market manipulates 1 million people, you will be one of those few that will be left standing, because you'll be having an understanding of how they actually manipulate and do whatever so here, lower high there. So long this lower high is not broken, this market is still in a bearish order flow. This internal structure is still bearish order flow. So long this lower high was not broken, we're still bearish. So long this one is not broken, we are still bearish. Our bearish bias is still valid, right? So that was the first point. That one was never broken, so meaning we are still bearish. Point number one. Point number two, we identify levels. Levels, for example, in this case, that's a resistance. Okay. Here, you notice that there was a level, right? So this is almost a similar situation to what is happening on Crash 300. Look closely, you realize it's almost the same thing that is happening on Crash 300. They give you a what you call this, a supply, tap. All this now is liquidity. This is liquidity now that was being generated here. This is generation of liquidity, which is happening on Crash 300, exactly the same. So what they are going to do on Crash 300, they'll take out, then This taking out is a lot of money to them. It's a lot of liquidity. The majority, let me tell you the truth, the majority here, they are confused here. Especially once it breaks above here, once it breaks above their stop loss being taken out, they actually buy hard, thinking that it's going to continue. Then boom, they're taken out again. That on its own, being taken out up and being taken out down, it's a lot of money on the institutional, on the institution side. It's actually a lot of liquidity. Actually, a lot of liquidity on their side. So now, after liquidity has been collected, the market must now go where it must go. After liquidity has been collected, the market must now go where it must go. So I've mentioned, so long the year we were not broken, we are still bearish. We have another resistance. We also had a level here. So three things here. We had a level where liquidity was being gathered. This was simply liquidity being gathered. Because if ever it was not liquidity being gathered, it was supposed to just tap this into this level once or twice, then go. But all these other touches were simply generating liquidity. Then this move now, this was a liquidity sweep. Liquidity sweep, done. Once we have swept liquidity, all we now need to do on a lower time frame, all you just need to do on a lower time frame, identify our entry criteria. Our entry criteria, they're always the same. For example, if we're going up, we expect a break of this internal structure, higher low. Once we break here, right, we expect the market to come back into any other supply zone that was not. So this on its own is also a form of taking out liquidity. How do they take out liquidity with this entry criteria? For example, in this case, most retail traders, they know once the support is broken, they sell. Pa, their stop loss above here, they're taken out. Simply liquidity on the institution side as well. So one of our entry criteria, if ever there's a zone that was not tested there, they'll actually come all the way there. Sometimes you might find the zone is here. Sometimes it can even be just above the broken support there. That's why it can actually do this, then go. So that's our entry criteria now on a lower time frame. So go down to 1 hour, 30 minutes, 15 minutes. We just want to look for our entry criteria. Once our entry criteria has been met, remember, on a higher time frame, liquidity has been collected. And once liquidity has been collected, what must happen? The market must now go where it must go. The market must now go where. Let's look at internal structure, internal structure. Let's follow internal structure. This was our higher low, not broken. This one, it's a higher low. Why is this a higher low? Because it broke to the upside here. So it's actually a higher low. Already, this is our first entry criteria has been met, right? We have this internal. This is point number one, meaning once we pull back into this zone, this is a confirmed sell. Why is it a confirmed sell? It's a confirmed sell more than even the sells that we took here in the morning. These ones, they were risky sells. Why were they risky sells? Remember, internal order flow, it had not yet shifted from bullish to bearish. We just tapped into a zone, but internal order flow never shifted. Right? So those are your risky entries. This one now, here we already have this. This is the confirmation it has happened. All you just need to wait for now. Wait for this. That zone wasn't mitigated. It's a zone that they actually initiated their orders from that zone. So they will come back there. They will definitely come back there. All you now need now is patience enough. Patience to wait for the price to come back into this zone. That's a confirmed sell. That's a confirmed sell, confirmed sell. If ever your account allows, you can even use proper risk management there. Proper risk management, I'm referring to a risk management that you know that you're going to actually make good money out of it as well as also giving room that just in case it wipes out people closest below, you also be still in the trade. So that's also another way of when you're entering your lot sizes, also give room to your margin level. Make sure that your margin level is no longer red. I mean, I've seen people entering to an extent that they leave their margin. When you see your margin level, right, this is another tactic that I want you to use. when you're applying your lot sizes and everything, make sure that your margin level doesn't go below 200. Your margin level, make sure that it doesn't go below 200. When it goes below 200, when it goes below 150, there now, any slight manipulation move against you, soon it will be red. Soon it will be red. And when it's now red, there are chances that if ever it continues being red, they'll close out all those other positions. They'll close them for you. You know this. Most of you know this. You know this. You know this. So that's also an art. When you want to make sure that you're always in the game, make sure that your margin level doesn't go below 200%, 200. When it's like that, it gives you room that even if they come here, they wipe close below. You know that even if they do that, you are still able to hold this trade and still be in the trade while still being in the game. Because that's also an art that they can use. In as much as they can come here, then drop without even doing that. But I'm just giving you other scenarios that they also do, other scenarios that they also implement just to confuse people, just to manipulate retail traders, and also some smart money traders. So here I have an order block here. It can actually uh, boom from there. If it doesn't boom from there, it's also fine because there's also this one here. But this one was retested, this one. So it might not come all the way there. I'm just trying to predict where it can actually boom. So here, if it booms, it's a beautiful thing. You can also add your Fibonacci. Fibonacci point A to point B. Let's say our point B, it's around this zone. Let's say it's around here. Means 78.688%. We strike, we enter ourselves. Those ones we are holding. First major target is this low. The final target is this low. So this one is it's a beautiful opportunity. It's going to actually go all the way. This one, it will go. So now I want you to watch now how it's going to flow, especially after liquidity has been collected. Liquidity has been collected. I showed you how it has been collected. And we now have this internal structure, change of character. I want you to watch the move that is going to happen from there. I want you to watch the move that is going to happen from there. Check this impulse move. It started there. I want you to watch the next coming moves that are going to happen there. Rarely will you find it consolidating anymore like this. This is fluctuating. Right now, once it comes back there, we expect some good pushes all the way to the downside. So that is a powerful opportunity that I'm expecting everyone to take. So here, if we refine to 30 minutes, it might actually bounce from here around this region. Right. So change of character here. So this one, in the morning, we took these cells. We took our trade there. Right. So that trade now, it was simply based on that supply that has been there, that old supply, right? The danger now about this trade was the break was here. After this break, where is your higher low? Your higher low is here. It was never even broken. Number two, so here now, after they've broken like this, where is your higher low? Your higher low is this, which has been broken. So you can compare the two trades, the one that we took in the morning and the one that you're about to take now. You realize that that one in the morning was a low probability trade because internal structure was never shifted order flow from bullish to bearish. But this one now, it's now a high probability because for our order flow, we are bearish, number one. Number two, this lower time frame order flow now is also now bearish. This is a confirmation to say we are now in a bearish order flow because we have broken a higher low. Once we've broken a higher low, it means whichever low is going to be created here is going to be a lower low because it's lower than this. Then we push back, create a lower high. We push back, lower low, push back, lower high. So this is how it will be flowing. This is how it's going to be flowing. So the trades that you took in the morning and the one that you're about to take now, those are actually two different trades in terms of probability. The one that you took in the morning, it's actually a low probability because of the factors that I mentioned. a low probability because of the factors that I mentioned. This one, it's a high probability because of also the factors that I've just mentioned. So I'm hoping that you are going to make money out of this boom 500 sell. It's still selling. Don't be confused. Many people right now, retail traders, they are confused now. They're confused. So this thing is buying. What is happening? What is happening? They are now confused now. They don't know what is really happening. They don't know what is really happening. But us now, we know what we're doing. We know what we are saying. We know. So here, the same thing that you saw on boom, whereby we create a level, generate liquidity, then we wipe it out. After wipe out, wah, then as we start buying there, then after the confirmation here, which is change of character there, pull back, we actually add more buys, then we hold all the way to the top. So those are the two trade opportunities that we currently have: boom 500 sell and crash 300 buys. Those are the opportunities that we are currently having right now. So I hope it was clear. I hope it was clear. If ever you need further understanding, you simply go to the YouTube channel. We'll publish this video